Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be dissecting Q4 and F23 fiscal results from Core Scientific, and in addition to that, we're going to be talking about the outstanding ETF inflows we're seeing over the last couple trading sessions, the impact that's having on the price of Bitcoin, and why we're still seeing the miners retreat despite the strength in the underlying asset. We've got a ton to go through in today's presentation, but before we do, take a second, hit the like button, you guys. It's a huge help to myself, Anthony, and the channel. It helps get this content to other people like you who may find value. If you're not already subscribed, McNallie Money, feel free to join. We just hit 42,000 subscribers. We would absolutely love to have you as part of the community. And with that being said, leave a comment in the section below. Let us know if you're holding shares of Core Scientific, what you thought about their earnings, and your outlook on the Bitcoin mining sector as a whole moving into halving next month. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got our resident Bitcoin mining analyst back in action, Anthony Power. Anthony, we're coming off probably one of the most anticipated interviews we've done so far this year. We just had the Chief Mining Officer, Ben, on from Bitfarms. Really an absolutely solid interview, every way you look at it. I know you and I were both in there. What were your thoughts on yesterday's discussion?
No, I think it was a great interview. He was very clear, provided clarity in all the questions we asked him. None of them fazed him. We were coming up with questions. I was coming up with questions during the interview because he was so good at getting the answer. I thought I'd try and get some more out of Ben, but he just met that. And to be honest with you, that discussion could have gone on for another hour, and we would still not have finished all the questions that we could have asked him. So we got a good hour out of Ben yesterday. He really appreciated it. Thanks us for it. That's good. But we're just, we've been very lucky this year. You can go through and we've had some great people on the channel, and we've got more to come.
Yeah, I actually keep a notepad here, Anthony, and we now have had, I think, 12 or 14 of the top CEOs. So we've had Saloon on, we've had Sam Tabar from Bit Digital, we had Jeff Morphy from Bitfarms not too long ago as well, Jason Less from Riot, we just had CleanSpark, Matt Schultz on not too long ago. And then in addition to that, Anthony, we've got BitDeer coming up at the end of the month on the 28th. I know you just put out a great article in Compass about BitDeer, so we can get into that today too. And then Core Scientific. So today we're talking about obviously their Q4 F23 results, and Adam Sullivan has just reached out. He said he can probably make it on next week. So pretty good lineup of individuals, especially if you're involved in this space. Now later in today's program, Anthony, I want to talk about the Bitcoin price. Obviously, just every single morning it's a new all-time high. We are seeing a little bit of strength today in the miners, but still not necessarily where we would hope they were. So I want to talk about that. But Ben actually really gave me a lot of confidence yesterday. He had said, in his opinion and from Bitfarms' opinion, they have never seen mining metrics as strong as they are right now going into a halving. We've never seen an all-time high pre-halving. And I've put together a number of tweets and stuff that I've found over the last couple of days, hopefully to instill some confidence back in the Bitcoin mining community here we have, Anthony. But before we get into all that, let's kick off with Core Scientific earnings. I know this is one we're starting to follow more and more. Definitely what we would call kind of the tier one miner in terms of their production exahash. What were your thoughts on Core Scientific, Anthony?
Well, I think even those people that don't follow Core Scientific, the expectation that the results would have been absolutely gleaming was probably a little bit of a step too far. But bear in mind, we're talking about a period where they were actually in Chapter 11 going through, try and reorganize the company, look at the debt position, refinance. So they had a lot of work going on last year. But there are some positives to Core Scientific, and we've highlighted them in previous podcasts. I mean, if you're looking from a market capitalization position, they're not necessarily going to be, effectively a tier one miner. If we take the market capitalization, even as we speak now, it's probably about 600 million. But when you start looking at, a company with a market capitalization of 600 million, what they actually do, it paints a different story. So they did make if you look at the year position for 2023, they made a big loss of 247 million, but it was an improvement on previous year. they achieved 502 million in revenues in 2023, and they mined 13,762 Bitcoin in self mining, with a reasonable good percentage, for hosting as well. Now, 13,000 plus Bitcoin there was the highest achieved by all the mining companies. And even if we go back the last 3 years and look at what all the miners have done, Core Scientific are about 15,000 Bitcoin ahead of Marathon Digital in terms of production for the last 3 years. So they have really been a strong performer from a mining perspective. Other good points to note was they've got more machines coming in 2024 now to raise that hash rate, and I believe we're looking at at least a 20 exahash hash rate, which then sort of gets them into that Riot platforms, the CleanSparks by the middle of the year, and Iris Energy and Bitfarms by the end of 2024. So we're going to have a whole gang of miners with at least 20 exahash, going into the new year 2025. Their efficiency is coming down, so they are bringing in the latest machines now to replace some of the other ones and add to the operational hash rate. They've got currently 158,000 company-owned miners, but they're bringing more in now. Their efficiency for those mining machines is actually pretty good. It's actually around about between 27 and 28 joules per terahash. So compared to the industry standard of about sort of 35 to 40, that's good, and that will improve as these new machines come in as well. So that will get them closer to the likes of where CleanSpark, Riot, and Marathon holdings are sort of they're sort of languishing there and closer to 24. So they have in terms of infrastructure, they have 724 megawatts of power and available at their sites, and they have sites in various states. So they've got them in Dalton, they've got them in Texas, they've got them in Kentucky. So they've got sites. We heard this from Ben yesterday. Don't have all your eggs in one basket. And this is a mine that sort of is like probably using that strategy there. So they have probably 5 or 6 different locations. Quite a big representative in Georgia. So there must be close to, I think Dalton is one of their sites there, close to probably where the CleanSpark guys are there. But they've got a lot of sites there, and they've got an expansion planned of 72 megawatts this year, and then over the next 3 years, looking for another 300 megawatts. So that takes them well over, a gigawatt. And again, that's a target that some of these miners are looking at now. We've been talking megawatts for a while. A gigawatt is where some of these are aiming for. Corsicana itself is a 1 gigawatt site when it's fully operational, fully utilized. So, and Riot have only got, they've got the Rockdale site and they've got the Corsicana site. But with Core, they've got about 6 or 7 different sites for theirs. The other thing that interested me in the update was the fact that they were able to mine a Bitcoin for around about $14,500 in 2023. So that's a good sign. I need to do some more analysis on that and just compare that to the other miners. But if that number's true, and that's the energy cost plus the operating costs associated with it. And when we say operating costs, we're talking about staffing costs, personnel costs, software, telecommunications, security. It doesn't include depreciation and stock compensation because, like we said many podcasts, they're non-cash costs. But yeah, we're looking from an energy cost, 12,528. And if you turn that into cash-based hash costs, that's 3.33 cents a terahash. So the operational cost is quite low. And the reason operational costs will be low for Core Scientific is when you look at this, if you look at the amount of Bitcoin they're producing, that 13,500 Bitcoin gets spread over their operation cost, or their operation costs get spread across that number of Bitcoin there. And a company that's mining, say, 2,000 Bitcoin a year, might have less operational costs, but they've got less Bitcoin to apportion that against. So they've got a very low operational cost, only 2,000, just under 2,500. So that brings their cost of mine in 2023 just under 15,000. So that's a good price. And when we're looking at the halving coming up, you want your cost to mine a Bitcoin as low as possible, and that looks like it's that's certainly competitive with the likes of Riot, with the likes of TeraWulf, with the likes of Bitfarms. That's certainly competitive and may even be higher or lower cost than some of those mines I've quoted. But that sets them up for 2024. The one big issue, obviously, for the company is with regards to obviously the debt that came out post the emergence of Chapter 11. So if we look at how much debt they had when they came out of Chapter 11, I think it was around about the 24th of January. We're talking about, in terms of debt itself, 608 million on the balance sheet. And what they've managed to do, they've managed to negotiate that debt. It's in various formats. So, you've got some as secured notes, some as equipment loans, you've got non-convertible debt. They've even got a drawdown term loan, and their interest rates associated with them are actually very competitive. Certainly very competitive what miners were paying in 2022 when all the problems happening. And if you think about the Bitcoin price at the moment, and we'll talk about that in a short while, the Bitcoin price now is enabling some of these miners to meet some of these costs of paying the interest payment and also the capital payments associated. But with Core Scientific, they've managed to navigate this so that they don't get hit in these first couple of years as heavily as they do maybe in 5 or 6 years' time. So, in terms of interest payments over 2024, we're looking at 71 million of interest payments. And in 2025, 64 million. And then in 2026, it starts getting, to 90, 2027, 125. And finally, in 2029, you're up to 354, which is effectively the secured convertible notes. So if they're not converted, that amount has to be found in 2029. So they've managed to sort of structure their debt in a way that they can meet it as we go through the various cycles of Bitcoin. And if you're producing a Bitcoin at just under 15,000 and the Bitcoin price at the moment is 73,000, it means you've got some leeway now. And even when the rewards drop by 50% in April the 20th, that 15,000 to mine a Bitcoin gets closer to 30,000 because it will take twice as long to mine a Bitcoin. Therefore, you'll need, effectively twice the cost to mine it. That still gives them at 72,000, a 42,000 per coin margin to pay to meet other costs. And so that's going to put them into a good position. But, there were some green shoots. We know the debt's an issue. The debt's an issue for every miner. It looks like what Core Scientific are doing, they're putting their plan out there so that everyone can see. Obviously, we want to get Adam onto the show, soon, because he can sort of articulate some of the other issues I haven't mentioned today. So, when they emerged from Chapter 11, shareholders were given a share and a number of warrants, and he may be able to talk through and explain something more about the warrants, something a little bit more on the debt, and put shareholders' minds at rest. One thing we know about Core is that on a month-to-month basis, they deliver Bitcoin, and they're fairly consistent. In fact, in terms of consistency over the last 3 years, they've never had any sort of what we'd say months where the production was poor. They tend to be very, very consistent. They might not be at the top of the table like Bitfarms or Hive Digital, but you know what? They're in that sort of that middle bracket month after month after month. You don't see. I've yet to remember Core Scientific having an actual, what we say, a bad month. And we can name a few other miners that have had a bad month literally every month. So, they do deliver, and that's why they deliver the biggest amounts of Bitcoin. Even in February, they delivered the biggest amounts of Bitcoin of all the miners. So they actually, with a much lower hash rate than Marathon Holdings, they delivered, significantly more Bitcoin. So that just tells you this is a company that, can deliver more new machines coming through to increase that hash rate. And I think they've got a real good chance now of having emerged from Chapter 11, starting to get back to where their shareholders expect them to, and that's firmly in that top tier, delivering results like the other top tier miners.
Yeah, it was definitely pretty hairy there for Core Scientific for a while, but it's so interesting, Anthony, because you're right. They consistently put up 1,000 Bitcoin a month, which at these prices is generating a phenomenal amount of revenue and free cash flow. So operationally, fairly sound. They just got over leveraged financially, made some poor decisions, and Adam Sullivan and team have now kind of righted that and seem to be on the right path. So looking forward to that discussion. Now, you mentioned there's been some miners who are underperforming. So for the next segment of the video here, you guys, we want to talk about Bitcoin price and miner performance. So I've scoured Twitter. We're on here obviously quite a bit, or X, looking through tweets and analysis and opinions out there. One that's come up, Anthony, before we get into the Bitcoin price, I've been seeing a lot of concerns about marathon production this month. The quantity, the energy, the capacity, a number of different things coming up. So again, none of this has been validated. We haven't seen their month-end results. But have you been seeing this, Anthony? And are you concerned that production may not land where we expect for marathon?
Yeah, there seems to be some sort of like, a competitive race between CleanSpark and Marathon at the moment. And, you've got the CleanSpark shareholders accessing the Marathon wallet and determining how many Bitcoin they've been mining, certainly in the first 7 or 8 days. And to be honest with you, CleanSpark were on a par with Marathon over that first week. There was nothing between them. Obviously, Core Scientific wasn't included there, and I would imagine that they'll be probably a little bit higher. They have got a higher hash rate than CleanSpark, and CleanSpark haven't got that a significant advantage in terms of production by exahash to suggest that with a lower hash rate they can overhaul Core Scientific. But there's no reason why they can't overhaul Marathon, because Marathon have highlighted they've had energization problems at some of their sites. Again, when you don't have the control over your sites, you're going to fall into this issue. But saying that, we've got miners who've had energization and electrical issues at sites, and but it does mean that how are you as a host treated in respect to the facility where they've got their own machines in there. And so it all depends how you're treated as a host miner compared to the hostee who's got machines themselves in a facility. And you can imagine, when there's maintenance and software issues, which machines are going to get fixed first? Where's the revenue coming from? Yes, there'll be contracts about you will dictate that you'll reach these targets in terms of power. But if you're a host, you're effectively second class. I mean, we always you hear that adage, when you go and hire a car, people say, "I'd love to see what this car can do on the freeway or the motorway," as we in the UK. You don't do that with your own car. You don't treat your own car like you treat a hire car. You don't treat your own home like you treat a hotel room. And am I thinking, if you're a host miner in some of these facilities, are you getting treated the same way as people treat, in additions there? You might be lucky, you might get to, a really good host company that are in there and they really look after you, but Marathon have had, I go back over the last 2 years and I think I can recall two good months. And one was May last year, and then we had December. December was outstanding. May was good because of the ordinals. And that had a real emergence. So the fees, the transaction fees for that month, everyone did really well, and Marathon did well that month, and they did fantastic in December. They blew every record out of the park. They were head and shoulders above every miner, and we just said in that podcast, could they handle it for another month? And as Jack Nicholson said, no, they couldn't handle it. And so they were down behind Core Scientific. Are they going to be top dog in March? We need to see. I mean, they've certainly got the hash rate to catch up and overtake CleanSpark and Core Scientific. It's whether they can. We just know that both the other two miners consistently put out what they should be putting out. And if you look at how much Bitcoin is mined a day, how much of the global hash rate those two companies have got, and then you start coming up with an expected return, what's your expected Bitcoin produced, those two companies tend to get close to what they should be producing. Other companies are having, not as an easy time of that. And if you go down the updates, there's generally some issues on sites, things like that. And, we thought that Marathon would turn the corner. We want them to turn the corner. They're the biggest mining company, market capitalization close to 6 billion. That's probably twice as much as CleanSpark, certainly twice as much as Riot now. Now they're going to get assessed on what they do operationally. And Ben was right yesterday. You're as good as what you produce today, not what you produced a year ago, not what you're going to produce next year, what you're producing now. And so, at some point, shareholders might get frustrated with what's happening there. We know they've got two of the big sites coming online, with which they will control from their perspective after April 30th, when Hut 8 Core hands them over, and so that gives them 45% of control over what they're doing. And I'm sure that they're looking for other facilities now where they can sort of like get that 45% close to 100%, because it's just not good enough. You're the biggest miner and you'll have big bills to pay, and so you need to produce Bitcoin. And if you're 700 or 800 Bitcoin down on a month, that's a lot of lost revenue at today's prices. That's 50-60 million. The test will come when we get the March updates out in a few weeks' time, and we'll see how they've done against the likes of CleanSpark. But there was definitely on social media a group of investors every day saying this is the CleanSpark total, this is the Marathon total, and there was nothing between them. So Marathon indicated, I think, that they're coming online, so when they do get online, when you've got 28 exahash, you're going to blow CleanSpark out the water with 16. There's no, even if they've got slightly less productivity, you can't, 12 exahash is a big number. But when 12 exahash is offline, you're on level playing field then, and so CleanSpark guys will be monitoring that situation. But we'll wait and see what the March update looks out for all these miners, and just see if Marathon can recover some ground on what they lost at the start of the month. I think they're getting back up to speed, but we can see from their wallets out there publicly, so we can see from the wallet what goes in every day in terms of mining, and we'll sort of maybe on another podcast in a week's time, we'll give an update of where it is and has it improved. But yeah, they had a poor month in January, poor month in February, and so can March have some green shoots? Because otherwise, you're going to get some of these other miners are going to be taking that mantle off Marathon, and that'd be interesting.
Well, and all I keep thinking, Anthony, it's definitely a strong vote of confidence, I guess, for the vertically integrated approach to Bitcoin mining. And I keep thinking what Ben was saying, we are going into potentially the biggest bull run ever the world has seen for Bitcoin. If I was running one of these companies, I would want to be in control of every possible component of my organization with that amount of opportunity on the table. So again, time will tell here, you guys. No company is perfect, and we have mentioned on multiple videos, when you've got an organization of that size, scale, scope, it's very difficult to keep it all running perfectly 100% of the time. So we'll keep an eye on that one. Now, Anthony, another one that I guess is making people question or scratch their head a little bit here, Bitcoin price. So as mentioned, I've pulled together some tweets here. I've been reading probably a little bit too late last night into the nighttime there, but Bitcoin, I grabbed the highest screenshot I could see, broke $73,000 US this morning or late last night. 73,142 is what we have on the screen here. So we are well past all-time highs now, Anthony, going into halving. This is something that we've never seen in one of these cycles previously, and obviously a very strong bullish indicator. As we know, supply is cut in half. That should also inflate the price, and if we're already starting at an all-time high, even better. Now in Canada here, obviously our dollar isn't as strong as maybe I would hope. We are flirting very close with 100,000, so 6 figures, Anthony. The highest I saw was 99,187. So a major psychological milestone for Bitcoin. I shared in one of our videos about our sell strategy, the psychological barriers, and we saw that with the all-time high. We saw a lot of selling pressure come in. I would expect to see that with the big numbers, the 125,000 milestones as well. So Anthony, Bitcoin price, there are no problems there. Demand, supply, ETF money, it's all working really good for Bitcoin, but we're continuing to see the miners pull back. And I know you gave some reasons to that in our last video. Do you mind just refreshing the audience on kind of those key themes we talked about?
Yeah, I mean, it's not just one reason. I mean, you've already articulated that the money that's flowing into ETFs is phenomenal. We can't underestimate what's happened here. We're only 2 months into this, and in that 2 months, the ETFs have already accumulated what the gold ETF did in the first 2 years. So people have always said Bitcoin, it's like digital gold, but it looks like it's digital gold plus because everything's happening far quicker in that space. So what you might have then, if people want to invest in something that's directly correlated to the price of Bitcoin, and they can do that in a fund and have it tax efficient, then the ETFs can fulfill that criteria. And so, you might have people who've been moving some of their investments from the mining stocks. You've also then got to consider what happened to the mining stocks in 2023, and they absolutely outperformed Bitcoin. Literally every mining stock in North America outperformed Bitcoin in 2023. So that hasn't happened in 2024. We've seen the Bitcoin price absolutely, rocket in 2024. And in terms of, even where it is as we speak on this podcast, which is around about 72,500, the Bitcoin price is up 71%. Just from 2024, from year to date. And if we look down the miners, there's only now one miner that is actually in positive territory for this year, and that's CleanSpark. And if you think, CleanSpark at the end of 2023 were 10 exahash, and now they're 16 exahash, that's going to increase the investor sentiment in that company. You grow 6 exahash in that space of time, you're going to have an increased share price. And so they've managed to sort of keep up. They're up 50%, not as high as the Bitcoin price. But again, we talk about, the mining companies, the price of Bitcoin now is making them more profitable. So we've just seen those results there from Core Scientific, which were good results in 2023 compared to 2022. They managed to reduce all their metrics, even though they still made a significant loss. But the price of Bitcoin is at the moment, which is more than twice the average in 2023. Not these miners will be very profitable in 2024 going forward. Even with the halving, we were saying if the price can get to 50,000 by the time of the halving, that might help some of these miners, the more efficient miners, because that's probably where they're going to be paying in terms of cash flow. It will cost to mine. Even the sort of Bitfarms, Hive. Iren, all these, Cipher, some of these mid-tier miners can mine a Bitcoin at the halving at about 50,000 in terms of cash terms. So, that's what we were hoping for the price. The price now is like 72.5, and we're 39 days away or something like that from the halving. So it's going to be, I personally believe the Bitcoin price, potentially will go higher now. This ETF has changed everything. It really has. The amount of money flowing into that, it just means there's not enough supply. The supply that's out there at the moment won't last more than about another 2 months because they're eating up everything. And we know there's a big percentage of people haven't even moved the Bitcoin in the last 2 years from the wallets, so they're not selling. We're reaching all-time highs now, and all the indicators are it'll go further, and hopefully it does go further. But they're not selling. So, when these ETFs go out there and buy, because they have to buy, you invest in ETF, you have to have an ETF-backed fund. You can't go in there and say, well, we'll buy some gilts to cover it, because gilts just won't cover the Bitcoin, volatility. But you're still going to have in the mining stocks, you're still going to have these investors who want to be in companies that, potentially the volatility can outweigh. We've seen these companies turn around very quickly. We saw them drop in early January, just around the signing of the ETFs, and the mining stocks dropped then, and all of a sudden, a week later they increased 50-60% in the week, some of these stocks. And so we know this turnaround can happen. It's just a case of where's the money flowing at the moment. I know MicroStrategy and Coin have been receiving a lot of money. Their share prices are rocketed again. It's a better correlation to Bitcoin. But as Ben said yesterday, there's an opportunity in the mining stocks, and if you pick the right mining stocks and do your due diligence, look at the fundamentals, then there's some real opportunity there at the moment. Some of these stocks are actually real good value, so it's worth paying some attention and time to do that, select the right stocks, and then just sort of is to wait I'm trying not to. I don't get really too focused on the Bitcoin price on a daily basis. I mean, you mentioned it before the podcast, and I said I hadn't even seen what the price was today. I was focused on other things there. I'm trying not to sort of like every 5 minutes look at what the price is, because I know that all the signals are suggesting it's going to go higher. I don't exactly know myself it's going to go high, but the signals suggest that. We've gone through all-time highs last week, and we'll continue to go to all-time highs. What would the reason be for it to actually drop from now when all that money is going into ETFs? I mean, we're talking they've got a significant percentage now of Bitcoin, so they're not going to be giving up Bitcoin. I just think that the future is very optimistic in terms of where we are now. Mining companies will certainly come back into play when earnings start showing that they're bringing in significant profits. The only downside to mining companies at the moment, with the suppression of share prices and with the fact that most of them have got these big ATMs in place, is how that's going to affect the actual dilution of them companies. Because when your share price is $30 and you're diluting shares, you don't have to dilute as many shares to raise the amount of the ATM. Marathon have got, I think it's $1.5 billion ATM, and Riot and CleanSpark are, I think, 750. Bitfarms had a 375 million one, and they've got that in place there. They even said yesterday, we might not spend the whole 375 million, but we're gonna pay for things that we need this year. So they bought the mining machines already, the 140 million that they've highlighted this week on those S21 T21 models that are going to be put in place there to get them to 21 exahash. And if things come along from an opportunity point of view, they have some money. If they don't need to use it. It's not like we're going to spend every penny of it. But if the share prices are low at the moment, and we raise this in the, when is the sort of like, when do companies start thinking about when's the opportune time to sell? And that's going to be the challenge with the share price at the moment, because if they've got ATMs in place and have to make these payments to mining companies, so your Bitmains and your Canards and your micro BTs, if they're expecting payments at, say, at the end of March, and the stock prices have sort of like deflated a little bit, it means you're having to sell a few more shares to get that money. So the dilution of these companies, it's great in a bull cycle when the share prices are rocketing. Marathon and Riot both benefit from this, selling debts, but by diluting a company, and CleanSpark have done it as well when the share prices rise. You can make great moves because the share prices help you out as well. But if the share price has been suppressed, it means you're having to sell more shares. So, Bitfarms' market capitalization, I think, was about 700 million yesterday. So their ATM is literally half the company, and that's at today's prices. So, if the share price, if their market capitalization was 1.5 billion, it wouldn't take you as many shares to get your 375 million back. And if that makes sense to everybody, so hope that's a point to note as well. It's not everything's not all perfect. We want the share price to rise, but yeah, those are a few of the ideas. There's been some short interest as well in these stocks. The volume of stocks in Marathon and CleanSpark and Riot suggests there's short action on there, because Marathon are trading 100 million shares a day. And, how is that happening? They've only got 260 million shares, and that means 40% of their shares have been traded on a daily basis. So, there's a lot of short interest going on in some of these stocks. That's another reason why, they could be suppressed, ready for some of these big institutions who know, the timing of buying these stocks is really important, getting at the lowest, knowing that full well they can take advantage of that low price, buy a significant chunk of shares, and then ride it all the way back up to where the all-time highs for some of these stocks, and make a serious amount of money in a very short space of time. So there's some cyclical action as well in these spots. Not for the faint-hearted. Do due diligence. We're not giving financial advice on this channel, and so there you have it.
Yeah, you covered a lot of ground there, Anthony, and I think it's great. Another one that a lot of people have mentioned in the comments is this new tax that they're implementing, the 30% tax on Bitcoin mining. We don't expect that to stick, you guys. I think that's a traditional case of of fear, uncertainty, and doubt. With the amount of renewable resources these guys are using now, the grid stability, the benefits to the local communities, I just don't think that has a leg to stand on anymore, especially now with corporate America backing the ETFs. The other thing you talk about, Anthony, is these ATMs. And just to say it very simply, you guys, I'm not an accountant either. If you have a $375 million ATM, if your share price is high, you need to sell a lot fewer shares to hit the 375 as opposed to if your share price is low. So ATMs are based on the total value of shares that can be sold, not on the total number of shares that can be sold. So an astute point you bring up, Anthony. The other thing, you talk about ETF inflows, so I'll throw a couple numbers up on this screen here. We actually now saw our first day of $1 billion net inflows, so 1,000 million is $1 billion of net inflows after they take out the GBTC selling or GBT selling. That works out, you guys, to 11,946 Bitcoin. And in the world right now, all the miners, public, private, everyone, the guys with the S19 in their garage, they can make 900 Bitcoin a day total. So let that sink in, you guys. That's 12 times the daily production. And as you said, Anthony, there may be 21 million Bitcoin total. Satoshi has 1 million, 4 million have been lost, or the people have died and not given away their keys, whatever. And a good portion of that are people like you, me, the rest of the people watching this channel that aren't going to sell. So there may be millions of Bitcoins in the world. The amount that are on exchanges and OTC desks to be purchased is a lot lower. So if we look at that another way, Anthony, that's about $65 million a day of Bitcoin being produced. And again, $1 billion of net inflows. So a very unstable balance there. Now, the next two charts talk about what you were just saying, Anthony, the delta we're starting to see between the Bitcoin mining companies, which generally are a leverage proxy on Bitcoin, and the price of Bitcoin. And the one I've got on the screen here, it's actually showing the diversion of this. So the last 2 weeks, Bitcoin up 35%, the miners down 15%. So that's a 50% spread. We talk about going into halving and the impacts that's going to have on Bitcoin, but it doesn't take too long here, Anthony. We've heard a lot of the CEOs say they expect to exit 2024 making more Bitcoin per day than they are now at better efficiency rates, lower joules per terahash. So if your share price takes a 50% haircut, your production increases twofold and your efficiency is cut in half or doubles. It doesn't take too long to offset the impacts of halving, not to mention the transaction fees. So my personal opinion is Wall Street, big money, they don't understand the halving. They don't know what this means. They don't know what's going to shake out. They've taken their money, they've moved it to MicroStrategy and to the ETFs until they see what happens. And this money will come back soon enough, as we heard from Ben yesterday in the interview. And our good friend Mike Alfred, to finish everything off here, as indicated in Spaces, all signs point that the sentiment about to shift dramatically towards Bitcoin mining companies and Bitcoin mining stocks. So Anthony, I think we're in the right place. I think this is the old case of FUD, fear, uncertainty, and doubt. And I don't think there's any reason to be pulling the alarm bells just yet. I'll kick it back to you for any closing thoughts. But for me, this is a great opportunity. I've been buying every single day this week. And the longer these prices stay down, the better it is for us. I've heard a quote before, Anthony. You don't get mad that the price of gas goes down because you filled up your tank 2 days ago. And that's the exact case here. Just an opportunity to dollar cost average. What are your thoughts?
My closing thought, and it just literally came to me in the last sort of 5 minutes, is who felt worse? The guy who bought the 2 pizzas for 30,000 Bitcoin, or the pizza establishment who sold the 30,000 Bitcoin from that first transaction? I mean, that's going to be one to remember for many, many years.
Yeah, if that guy's still alive, I feel badly for him. I guess it's a chicken and the egg situation there, Anthony. Let us know your comments, you guys, in the section below. What did you think about Core Scientific? How do you think they're set up to perform the remainder of the year? Are the Bitcoin prices and the divergence with Bitcoin mining companies going to equal out? Are we in the right spot at the right time, or are Anthony and I out to lunch here, you guys? Let us know what we think. Love the discussion. Anthony, thanks so much. Make sure to subscribe, you guys. Hit the like button, and we'll see you tomorrow.